Good morning, everyone. Hopefully you can hear me. My name's Jonathan Crisp. I'm one of the directors of BarnOwl. Thank you to everyone online for joining us for today. We're very honored to have Robert Davie presenting to us today. Robert Davie is an attorney of the High Court of South Africa and also a member of the Law Society of the Northern Provinces. And we'll be chatting to us about greylisting. As we know, South Africa was greylisted, I think it was in January. It's another blow to us and to our economy in terms of investor confidence and making South Africa more risky for foreign direct investment, also make it a bit harder for us to, as South African businesses or South Africans as a whole, to do have access to financial services overseas. But hopefully Robert's got some good news for us in terms of what we're doing about being grey-listed, but also going to be chatting to us about the new FIC laws and accountable entities. It is quite scary in terms of how it can affect a lot of our businesses and what we need to do. Not all businesses, but chatting to Robert was quite interesting in terms of these accountable entities and how we all how this grey listing is going to affect us, not just from an economic perspective, but at a micro level in terms of our own businesses. So I'm going to hand over to you. Just a little bit of housekeeping. Everyone's muted at the moment, and you can place questions in the chat as we go. But what we'll do is we will open the floor to questions at the end of the presentation. So Robert will present for probably about 45 minutes, and then we will have questions and answers at the end. But Cheryl and I will also monitor the chat group, but we'll get to all the questions and unmute you guys or the audience at the end of the presentation. So Robert, I'm going to hand over to you, and once again, thank you very much for joining us on this very important topic. Thanks, Robert. If you want to share your screen and turn your camera on.
Great, thanks, Jonathan. Am I on?
Yes, you are.
Thanks, Jonathan. And thanks to you, BarnOwl, for this opportunity of discussing South Africa's grey listing with you this morning. And yes, there is good news, but it's not going to come easily. There's a lot of work to be done. So yes, there's a way forward, but we're going to have to work on it. As Jonathan mentioned, I'm an attorney. I'm an independent legal consultant. I worked for the banks for quite a while. I've got quite a bit of anti-money laundering experience, going back to the commencement of FICA in 2001. And it's been interesting to see the developments on the Financial Action Task Force and the grey listing that's come about. Back then, it was very much a focus on the banks, but the net has been expanded quite broadly. I'm just going to get the presentation here. Share.
I think just to come in there, we will share the presentation, and the recording will also be up on our website. So yeah, so Robert's presentation will be on our website after the presentation, and we also do write-ups on the info sharing. So that's great. It's up, Robert.
Right, great. Jonathan, just from my side, I'm not seeing it. Hold on a sec.
You're on the third slide, so
my apologies. Let's see. Let's go into that. Go to that.
We can see it, Robert.
Right, great.
Can you see it?
Yes, just on the side. Yes, it's coming through now. Thank you. Yes. Sorry for that. The agenda for today, just to cover some of those issues. Firstly, to have a look at the introduction and the background to the Financial Intelligence Centre, that's the FIC or the FIC, and the Financial Action Task Force, the FATF or the FATF. Then to look why we are in the position we're in now, what's happened, why we're in this, which is a bit of a mess because of the consequences that you've mentioned. Then to look at what governments and the legislature's response has been, what the timeframes and deadlines are, and then what needs to be done. The result is that there's 8 areas of strategic deficiencies that need to be addressed by South Africa to get us off the grey list. And very importantly, this includes the new categories of designated accountable institutions, and then also the fixed requirements for compliance for these new accountable institutions. So what is the Financial Action Task Force and what role does it play? It's a global international body that promotes the policies and sets the international standards relating to the combating of money laundering, terrorist financing, and what's been added more recently is the financing of the proliferation of weapons of mass destruction. So a lot of this, it's quite dry, it's quite detailed, and I think to the man in the street, it tends to look rather esoteric and what's the big deal, what's all the fuss about. But the aims and purpose of the legislation is very important. It's simply to help prevent, reduce terrorism and wars, and the world's in a messy place. We've seen the conflict in Sudan, the Russian and Ukrainian situation. So terrorism and wars are a very real thing, and they're very expensive. So if you look at where the money flow comes from, that's a very efficient way of trying to reduce the threat that it has. With the Financial Action Task Force, there are 39 members. The Financial Action Task Force was formed in 1989 as a result of the meeting of the Group of 7 of that year, and again to address the concerns and the rise in terrorism. Interestingly, South Africa is the only African member of the FATF, but there's a number of other African states that are members through their regional bodies. There's a number of different groups there. Interestingly, and also worrying, is as we're on the grey list, we're in the company of Sudan, Senegal, Nigeria, and places like that. And again, when we look at it from the inside out as South Africans, we look at it and we think, well, we're not so bad. But if you look at it from the outside in, and when you consider that we are on the same list as a lot of these other countries that we would regard as being rather dodgy to deal with, we are painted with the same brush on that. So what is the Financial Action Task Force grey list? The Financial Action Task Force has a number of those members, and if you're in good standing, then you're not on those lists. But then you've got the 2 lists, the black list, which is the real baddies, and the grey list. And what does that mean? The countries on the blacklist have nothing to do with the Financial Action Task Force. They're not engaged in any way whatsoever. And these include North Korea, Iran, and Myanmar. And then the countries on the grey list, now including us, are countries that need to work with the FATF to improve the anti-money laundering regimes. So that's the grey list. What do we have to do now? We need to identify the strategic deficiencies and put steps in place to address those. Why is South Africa being grey listed by the FATF? Well, we did poorly in our 2021 mutual evaluation, and there were a number of deficiencies, and these added up to 67 different areas where the FATF recommended actions that we needed to take. We made progress, but unfortunately not enough. So a further assessment by the FATF in October last year showed that we had to address further aspects, and the Financial Intelligence Centre saw the grey listing coming. So they immediately started working on amendments to FICA, which were in fact passed in December, on the 19th of December, given the accountable institutions, and 3 months, that was until the 19th of March, to comply. So we're going to have a look at timelines and deadlines just now in a bit more detail, but we are effectively now under the new regulations. What are the implications for a country that's grey-listed by the FATF? Well, it's the reputational issue and the economic damage that follows on that. And I think we've already seen that. People debate how bad it is, but there's no doubt that it does have a negative effect. The second and related implication arises from the consequential action taken regarding cross-border transactions. And as a result of this, now selected institutions, the accountable institutions, are expected to undertake a more enhanced monitoring. And what we used to call Know Your Client, KYC, is now known as customer due diligence. These terms get used but interchangeably: Know Your Client, customer due diligence, CDD. So it really amounts to the same thing, but customer due diligence is actually an enhanced form of Know Your Client. Also, the institutions based in a grey-listed country that engage in cross-border trade will have high levels of monitoring done by them. And this might not affect most of the companies in South Africa, but it certainly has an effect on banks and the cost of doing business for them. And ultimately, in practice, that means that all the companies that are now accountable institutions, and we're going to have a look at that in more detail and see exactly what are the accountable institutions, have to be far more thorough in the processing and vetting of their clients and in the understanding of the sources of their funds. How long does it take countries to get off the grey list? Well, some countries have been on the grey list for a long, long time, but South Africa is going to try to expedite this, and we look at a period of up to 3 years. We can only get off the grey list once the FATF has looked at what we've done and say that they're happy with it. Government, through the Financial Intelligence Centre, has said that they want to address the 8 areas of strategic deficiencies by no later than the end of January 2025. What this means is that we're into very short timelines. We're in the middle of 2023. The measures to address those deficiencies have been put in place by the Financial Intelligence Centre, and it's now up to us as the accountable institutions to meet those requirements. For the legal and compliance deadlines, most are already in place. The next deadline is the 31st of July for the designated non-financial businesses and professions to register. And I think that acronym is important, because previously the FICA requirements were aimed more at the banks, but clearly now the net has been spread to include other businesses and professions that aren't directly related to banking. Right, what are the 8 areas of strategic deficiencies identified by the FATF that need to be addressed? These are high-level strategic areas that need to be addressed, and I'll skip through these quite quickly because the real interest is in what we need to do to meet these requirements, and that's going to be in the new accountable institutions and exactly what requirements the Financial Intelligence Centre has set to meet the FATF's needs in this regard. So the first deficiency is that we need to demonstrate a sustained increase in outbound mutual legal assistance requests. Then we need to improve our risk-based supervision of the designated non-financial businesses and professions, and show that these organizations are doing far more effective anti-money laundering controls. Interestingly, we're now talking about risk-based supervision as opposed to the rule-based supervision that we had previously. Up until 2017, our FICA requirements were more rule-based, so it was more a checklist type situation, whereas now the risk-based approach means that there's more onus on the accountable institutions to show what they've done as far as their anti-money laundering provisions go. Also to ensure that the authorities have access to accurate and up-to-date beneficial ownership on legal persons. And I think there's been quite a bit of this in the news. This particularly affects companies and trusts. There's been amendments to the Companies Act and also to the Trust Property Control Act, extending the requirements on beneficial ownership. Then the next few strategic deficiencies that were identified shows a question of we need to be better at what we're doing, do more of it, show that we're doing the reporting, show that there's an increase in investigations, and show that there's an increase in sanctions if in the instances of non-compliance. The seventh deficiency is to update the terrorist financing risk assessment and then also show the effective implementation of the targeted financial sanctions against the non-compliant accountable institutions. The targeted financial sanctions are lists that are drawn up by the Financial Intelligence Centre, the Financial Action Task Force, and the United Nations. And this consists of people, individuals, companies, and nations who are seen as having links to terrorism. And they, of course, are prohibited from any dealings with those. Right, what are the next steps to implement the action plan by the Financial Action Task Force? First, we're going to need to continue to work to address those 8 specific areas. It's also important to note that from government's perspective, from the Financial Intelligence Centre and from National Treasury's part, they want to strengthen and expand the anti-money laundering systems in the financial sector anyway, and also minimize the risks relating to emerging risks. And this is more specifically related to the crypto businesses. How to do this? I think this is the meat of what we need to look at this morning. It's the new categories of accountable institutions and then the fixed requirements for compliance. Right, firstly, the new categories of accountable institutions. The first one in this slide is the life insurance businesses. This excludes reinsurance, being the short-term businesses. Initially, the first draft of the FICA Amendment Bill related to the short-term insurance, but that's now been excluded. So if you're in life insurance, you are affected, but if you're a short-term insurer, you're excluded at the moment. Then we look at credit providers under the National Credit Act. They previously weren't an accountable institution, but now they've been added under this. Then credit providers excluded in the National Credit Act. It sounds a little bit strange to have the 2 categories there, but this is more specifically the credit providers are excluded. There are exclusions in the National Credit Act. For instance, there's thresholds on value, being the 1 million rand threshold. And so if you're a juristic person and the loan exceeds R1 million, you'd be excluded. But those credit providers now are part of the accountable institutions. Also, financial service providers under the FASE Act. So if you're in the financial advisory business, you're now probably going to fall under the new categories of accountable institutions. The business of a money or value transfer provider. Money transfer providers, we think of the likes of Western Union. Value transfer providers, initially it wasn't in the amendment, but if you look at the amount of monies that the businesses selling and transferring airtime go, there is certainly a money laundering risk in their business, so they've been included here as well. Then very importantly, the business of dealing in high value goods in respect of any transaction where such a business receives payment in any form to the value of 100,000 Rand or more. And I think this affects a lot of businesses that aren't aware of it. And the requirements for this is that you must trade in high value goods. It excludes services, though, very importantly. There must be a business transaction for 100,000 Rand or more. And it also includes any item value for 100,000 Rand or more. So practically, we're looking at car dealerships, art dealers, auction houses, mines, mining supply companies. There's a lot of businesses where if you sell any single item of 100,000 Rand, you're going to fall under this new category. There is a little bit of debate around bulk sales. For instance, if you're a miner and you sell coal, a bulk sale, or can you break it down? And similarly with farms, if you sell oranges, obviously the price of an orange is less than the threshold. But if you sell it in bulk and exceeds 100,000 Rand, there's some debate about whether that would be included. But certainly the value of the item is quite clear in most businesses. And then certain crypto asset service providers, if you're in that business, you know who you are. And I think actually from a regulatory point, you've probably got other bigger issues to worry about than this, although you certainly now are in the net of accountable institutions. And then also very importantly, and I think we've seen quite a bit of this in the news about the beneficial ownership, about certain trustees and entities such as accountants, which assist others in establishing companies. Right, if you fall into the category of these new accountable institutions, what must you do about it? And as I mentioned to Jonathan, the good news is that there are things we can do to get off the grey list, but there's an extensive list of things that we have to do. So what do we have to do? Firstly, register as an accountable institution with the FIC. Then we've got to formulate and implement a risk management and compliance program. This is very important and very comprehensive. To just run through a couple of the aspects that you need to do in this regard, you need to make sure that you document your RMCP, that's your risk management and compliance program, and the governance that goes with it. You need to then show your risk assessment and risk rating framework for your anti-money laundering strategy. You'll need to show all your customer due diligence controls. You'll have to show how you address the targeted financial sanctions. So there's lists of people, individuals, companies, and states that are on the prohibited list to avoid any dealing with them. Then you also have to have a list of the prominent and influential person controls to make sure that you're not dealing with politically influential people or politically exposed people. And this means doesn't mean that you can't deal with them, but that there needs to be an enhanced level of control over your relationship with them. Importantly, the account monitoring, also your reporting controls and your record keeping controls. So that in a nutshell is what needs to go into your risk management and compliance program. You'll need to appoint a designated money laundering control officer. You have to train your employees, identify and verify new clients, do ongoing due diligence in respect of existing clients. And here there's a distinction between one-off clients and an existing business relationship and a continuing business relationship with clients. You need to keep records of the identities of your clients and of transactions entered into with those clients. And you need to do sanction screening. Sanction screening is comparing your clients' names against those of the lists that I've mentioned about the individuals, companies, and states that you shouldn't be doing business with. And then very importantly, you need to report certain transactions to the Financial Intelligence Center. As I mentioned, we've moved away from a rule-based system to a risk-based system. And what the Financial Intelligence Center has done is put the onus on the accountable institutions to make sure that they control their anti-money laundering measures properly and to identify the risky and suspicious transactions So you can't just dump everything on the FIC. You need to actually assess it yourself and then determine whether you've got a risky or suspicious transaction. And of course, if you get it wrong, then you could be subject to sanctions and penalties. Right, who's responsible for all this? Specifically, the board of directors are responsible, and they must actually sign off on the RMCP. Obviously, failure to comply with these new requirements can lead to a whole lot of penalties. The penalties fall into two categories. There's the administrative sanctions, which relates more to cautions, directives to remedy, and it can include financial penalties. And then the second type of penalties will be the criminal sanctions, which can include jail time on it. The Financial Intelligence Centre has said that they're not going to immediately start jumping in with a harsh approach. They've said that there won't be a grace period, but there will be a period of 18 months where they will monitor and issue infringement notices or naughty notices to give advice and direction to companies. But this doesn't mean that you can ignore it at all. You need to be seen to be doing something. And also, if you do have an infringement notice, you're going to have to very quickly remedy what's in that. Otherwise, you will be liable to the sanction or penalty that will come with it. Right, just to go back to, if you've identified yourself as an accountable institution, what do you need to do? And that starts with your risk management and compliance program. But you also need to register. The Financial Intelligence Centre website has a portal called the Go AML web portal. You need to go onto that, register, and then there'll be a questionnaire. It's about 175 questions that you need to answer to make sure that you're up to date on that side. I think that covers most of the important issues, and I'll be happy to answer any questions.
Thanks, Robert. That's pretty daunting. You went through that fast, but yeah, just one question from my side. It looks, I mean, South Africa is brilliant at legislation and coming up with brilliant legislation, but enforcement and actually getting these things done, implementation, that seems to be a thing that we can't do. I mean, we don't. I mean, is there any? And if it's now left up to, as you say, I mean, I don't want to, smaller. Not that these are all smaller businesses, but you did mention accountable entities just being kind of sort of normal, medium size, possibly small businesses. I mean, 100,000 rand goods, for example, is really small. It sounds pretty frightening that small businesses are going to now have to register, get 175 questions, report anything, and it's almost like the good guys will end up reporting or trying to do the right thing. Anyone that's dodgy and trying to and involved in the wrong kind of stuff, how are they going to possibly police this or even catch anyone that wants to do the wrong things? I mean, let's hope there are not too many of them out there, although South Africa doesn't have a great track record. And then how do we ever get off the grey list? I mean, how does that work?
A couple of excuse me, a couple of very good points there, Jonathan. I'm trying to track all those different elements that you raised. I think firstly, it is risk-based. So if you're a small one-man business, you still have to do all these things, but there's a lesser onus, and there are ways of reducing the burden. But you're right, you still got to do all the basic things. You still got to register. You still go through the questionnaire. So you fall into that category. But I think an important part, more fundamentally, just from a governance issue, is that whatever business you're running, you've got obligations. There's rules and there's laws and there's various standards that goes with it. So whatever business you're in, you've got obligations. And this is just another one. What's the point of it? Absolutely. I think there's quite a widespread feeling that we've got all these great laws, we've got a great constitution, we've got sophisticated legislation, but what's the good of it if it isn't implemented and if there isn't enforcement of it? And that's a very good question, and it is worrying. And I think you mentioned President Ramaphosa's buffaloes. I think it's actually a good example. And what's happened with that? Well, funny enough, these amendments are actually designed to avoid that type of situation where you've got high value goods, you've got this money coming in. And on that situation, there's a couple of parts to it. Is that firstly, this is what the amendments are supposed to deal with. So they weren't in place when the president sold those buffalo. But there are consequences to it, by the way, because the matters now it has been investigated. It has gone to the National Prosecuting Authority, and what's going to happen from that, well, let's wait and see. But also it is interesting because I think that the businessman who purchased those buffaloes was a Sudanese national. So again, they are on the targeted financial sanctions list. So President Ramaphosa should have checked against that list in terms of the new legislation. And there may well be consequences to that. But most of this is going to come from the SARS, the receiver's office, and that will be probably on the exchange control issues of bringing all those dollars in without declaring it. So wait and see on that side. Jonathan, the other aspect that you mentioned is, yes, all those laws and legislation. If you want to be law-abiding and run a proper company in terms of good governance, you're going to have to comply. And it is burdensome. There is a lot to it. But having said that, if you're running a good business, you're already doing most of it anyway. You've already got a customer questionnaire. You've already got protocols in place to avoid losses within the company. You should be doing staff training on aspects as well, which you can add to it. So if you're running a good company, it does add to your burden, but it shouldn't be that terrible a burden.
Yeah, I think if anyone wants to put their hand up and ask any questions, please go for it. Are there any questions? Becca Muzi.
Yes, thank you, Jonathan. Excuse me. And good morning. This question is directed to Robert. I just, from an enterprise or an entity that is looking to acquire services or procure services or goods from another registered entity in relation to the requirements to disclose or to keep a record or update records of the ultimate beneficiary owners. As part of my due diligence in before we enter into the procurement with this entity, to what extent am I allowed to request those entities to provide me with the information that is required by law to be updated with the regulator? Is that easier to request, because in any way they have to lodge and update those information? I'm talking in terms of companies that will have all sorts of share structures or owner structures that are complicated. But we know that the person that is actually an ultimate benefited owner is one of the people internally. So to avoid or to manage conflict of interest, how easy is it for an ordinary entity to then request that information? Or would we have to go via, say, per year, for example? That's my question at this point. Thank you.
Yeah, thank you. It's a good question. I think there's a couple of parts to it, but whatever your company or entity is, if it falls within those categories of accountable institutions, you're certainly going to have to ask very detailed questions of your customers. And you mentioned about the group structures. That specifically on the beneficial ownership, that's what these amendments have now intended to address, where you've had layers of companies and trusts, which hides and disguises the ultimate beneficiary of those funds. The new legislation is intended to actually dig deeper into it. And yes, you as a business now, you've got to ask for all those details. So if it's an individual, it starts with your standard know your customer. And then depending on what you find there, once you've compared them on the targeted financial sanctions list to see whether they are on those lists or not, then you've got to raise your due diligence as you go. But then specifically, companies and trusts starts off at a high level of due diligence, where you're going to have to identify the company, the directors, the shareholders, and at each stage of your due diligence, if there's any warnings or red flags that rise, you then obliged, in terms of the amendments, to then take the next step and keep proceeding on that. And insofar as the steps goes, the Financial Intelligence Centre has been very good in giving guidance on these. And I know there's a lot of detail to it, and just going through the slides, there's each of those points. There's a huge amount of detail behind it. For instance, section 42 of the amended FICA now is the section that deals with what needs to go into your risk management and compliance program. And it details on each of the aspects of individuals, companies, what you need to ask. So absolutely, yes, you're going to have to go into a detailed program of obtaining information. And it is difficult, you know, sitting here as a lawyer, taking you through the provisions of the legislation is the easy part. It's making it work. And in real life, when you've got your customers and they don't want to share information, it's a hassle for them. And the more you dig, the more irritated you get with them. And certainly from a business perspective, I think that's one of these unintended consequences, is that it can make it more difficult for you simply from a relationship side. And also with these new categories, these designated non-financial businesses and professions, as opposed to the banks. With the banks, as you know, it's a nuisance, but if you don't do it, they just freeze your account. But for most of these other businesses now, what lever do you have over your customers? You want to do the business, they refuse to give it to you. You don't really have much of a lever other than just to say, no, I'm not going to do business with you, which is exactly what the Financial Intelligence Centre wants you to do. If a customer is not willing to comply with your requests to fulfill the legislation, they want you to say no to your customer. But of course, from a business perspective, that's a very unattractive proposition. And that's where this now, certainly with the new accountable institutions, you know, for instance, say art galleries, auction houses, if you now need to dig a lot deeper into who your customers are, there's going to be a reluctance to give that detail. You know, if you purchase on behalf of a trust, and not all trusts are affected, by the way, but certainly the business trusts you're going to have to look at. But if you purchasing something on behalf of a trust, you're now going to have to give far more information than what you did previously.
100%. Thank you.
Yeah, thanks, Robert. So there are a few more hands, but just sorry to come in there, Robert. One question. I think maybe some of the questions aren't always just about a client, but it's also about suppliers. So in other words, if you're in a procurement department and you now you know, need to dig deeper into who's going to be supplying you goods, does this apply to some of that as well? Does this help you dig deeper into beneficial ownership?
Jonathan, I'm just looking at, so this is the client-facing side. So if you've got a supplier, it's only on the purchase and sell, whatever that nature of it is. But if they're a client of yours, yes, this would apply. I'm just not sure when you say the supplier side.
Oh, I suppose, yeah, they would be a client. Yeah. No, they would be supplying services to you. So in other words, if you're sitting in a company and you're buying a whole lot of mining equipment from a supplier, you would want to make sure that you are dealing with a reputable company.
So just as an example, so if you've got a mine that's your customer and you're a mining supply company, they would have to do the due diligence on you. No, you sell it to them, so you'd have to do the due diligence on them. But if you've got a subcontractor that's providing you with the parts, then you'd have to do the due diligence on them, because it would be the customer relationship that determines who's got to do the due diligence.
Okay. All right. Peter, you've got your hand up?
Yes, morning, Robert and Jono. Thank you very much for this. I have a very simple definition question that one of my clients asked me last week. And it's really about they don't deal in high value goods. Their products probably sell for between 3,000 and 5,000 rands each, but they do ship in and out hundreds of these products. So obviously the transactions are much higher than the 100,000 rands. My understanding is that if we deal in items less than 100,000 rands, then we're not an accountable institution. Is that correct? Even though my transaction might be R1 million.
Peter, that's a bit of a yes and no answer, and it's a very good question because there isn't that much certainty on it. So, for instance, you can't split transactions. So if you've got an item that's worth 150,000 rand, you can't break it into three payments of 50,000. Say it's below the threshold. The item, the high value goods, is 150,000. But as I understand, you're asking it the other way around. You've got a whole bunch of widgets. The widgets are R5 each, but you ship thousands of these, hundreds of thousands of these. So the order actually is you've got 1 million widgets going out at 600,000 rand, and they're all together. There is a bit of uncertainty on that, because if you can break it down then into the individual components, then you should avoid the definition of the high value goods. But if you're looking at different industries such as farming, if you're a big orange farmer, for instance, you're going to, what you trucking out and selling, it's going to be in the hundreds of thousands. So that's a bulk load. And how do you break that down? And the thinking on that is that something like that will actually fall within the definition of high value goods. And also, just more from the fixed perspective, is that the whole purpose of this is to ensure that where the money flows, the big money flows, that there is due diligence and reporting on it. So from that side, you can actually see where the thinking will go. But if, for instance, you've got goods that are 10,000 rand each, and you've got 12 in a truck that you're now delivering, if you can break that down into each individual component of each individual good of 10,000, then the thinking is that then would not be within the definition of high value goods. And Peter, sorry, I'm not giving you a yes or no answer on this. It would depend on the circumstances. And if you're willing to share what it is that the goods in mind, I'd be happy to have a closer look at it. And maybe that's something we could discuss offline.
Okay, thank you.
Thanks, Robert. Cheryl, your hand was up next.
Yes, we had a question from Michael in the chat box. How does the risk management and compliance program align with normal risk programs of companies?
Absolutely. So from a governance side, it should fit in with what you've got already. And assuming you've got a number, you've got a proper risk management program, you've got a proper compliance program, and you've got the various policies to support that, including your anti-bribery and corruption your gifts policies, everything that falls within your what would be your social and ethics committee. And of course, not all companies are going to have a social and ethics committee. That's just for the bigger companies, the listed companies. But whatever company you have, you should have policies on dishonest behavior. So it should fit in with that, but you're going to have to specifically meet the requirements of Section 42 as far as the risk management and compliance program for FICA goes. So what you've got should be very useful, and you can integrate it with your RMCP for FICA. But because these are new and very specific requirements, unless you're really at the top end of anti-money laundering within your company, you are going to have to go through this whole process of developing a new RMCP specifically for FICA.
Thanks, Robert. Lebo Hung, you have your hand up. Please go ahead.
Good morning, everyone. So my question is surrounding the short-term insurance industry. So Robert, you had previously said that short-term insurers are still excluded as accountable institutions, but then you further said that financial services providers under phase are included. So what is the position there? And further from that, from a UMA perspective?
Absolutely. As I understand it, whether you the life insurer, whether you're a short-term insurer, or whether you're within the financial advisory, you're going to be registered within those different pieces of legislation that deal with short-term, long-term, and financial and advisory. So whichever part of that your business is, what you're already registered for, that should determine whether you fall within those categories. And as I understand the FICA requirements, it is that life insurers fall into the net. They're an accountable institution. Short term, not now. And phase, yes, you do fall within the net. So whatever your registration is, whichever piece of legislation you're involved in, you will be either in or out of the net. And just on that, we're looking at with the trusts and the registered practitioners, accountants, auditors, there's been some sort of debate as to who's caught by the net and who's not caught by the net. And there are points of distinction, and I think the accountants are trying to argue that they're not directly involved, but tax practitioners, for instance, will be do fall into the new accountable institutions. Trustees on business trusts certainly fall within the new accountable institutions. Companies whose business is accountants or firms accountants or businesses whose business is to manage other companies will fall within the new definition of accountable institutions. And I think just to go back to the question on that, is that within your business, you might have different parts of it. You might be a financial advisory, you might be short-term as well, and you might be a life insurer. You might have different elements of it. And on that, once you've identified what your business is and whether you fall within those categories, then it could be very important to ring fence which businesses they are, because you don't want everything to fall into the overall business. And this is where it can get quite complicated with group companies and different divisions. And maybe to use a simpler example is, say, for instance, if your business is that of the sale of car spares, but you also happen to have a lot that you occasionally sell cars. So your main business is not actually selling motor vehicles, it's providing parts and repairs and things like that. So if you now sell a car, which is more than likely to be more than 100,000 Rand, and if you just sell one a month, you now become an accountable institution. Whereas just as a parts dealer, as long as you're not exceeding, you're not selling fancy gearboxes or turbochargers or something like that exceeds 100,000, but as long as you're not exceeding that threshold, your parts business doesn't fall within the category of the new accountable institutions. So what you should do if you're in that situation, I'm just using this as an example, is that you then need to try and ring fence that part of your business that sells the high value goods. So with phase and short term, you'd have to have a look at it and then perhaps just separate out those different parts of your business.
Okay, thank you, Robert.
Thanks, Robert. Are there any other questions? I see it's, as I say, we will make the presentation available, and I suppose there's a lot of food for thought here. My mind is spinning. So, although I'm glad we're in the services business, so it sounds like we've escaped some of this. But yeah, it does seem like a quite pretty onerous, I've got to say. But we had Popia, now we got this. I mean, it's good stuff. It's as you say, it's part of running a business with good governance anyway. So if you're running a tight ship, it's good business practice. But I suppose, yeah, there are businesses that are just trying to keep their heads above water. You know, if they're estate agents or people dealing in motor vehicles and things like that. I don't know that business, but it's probably good business anyway. But it sounds pretty onerous as well.
Absolutely, and it is very difficult. And you mentioned that there is, as I say, it's risk-based and there's proportionality in the system. But what we're seeing so far is that the banks more recently are getting fined, hefty fines, by the Financial Intelligence Centre. You're talking about 50 million, 100 million rand at a time, and a lot of the banks have been fined. So to go back to your initial question about, is this going to have any effect? Yes, it is certainly there. And then the other existing accountable institutions of attorneys and estate agents, they're battling. The bigger firms and companies have the resources to deal with a lot of this type of legislation. And it's not just the FICA. There's the broader governance issues as well. But certainly some of the smaller businesses, it's hard. And the attorneys and the estate agents are getting fined 50,000, 100,000, 500,000 rand for breaches. But so there's a very real element of, if you don't get your house in order, that you are going to be on the radar of the Financial Intelligence Centre, and also however much pain it's going to be for us now. It is ultimately for the good to get off the grey list, because if we don't do this, we're not going to get off the grey list. We're going to continue with the economic issues. I mean, there's a whole lot of other challenges that goes with it, but if you're on the grey list, you're in a bad place.
Yeah. And I wonder how they will then, in a year's, or as you say, 18 months time, the theft or whatever will. I mean, they've got to come and then review how well South Africa's done. I mean, are they going to look at? I mean, how are they going to do that? They're going to look at how pervasive this new legislation has permeated through all the businesses, or just look at how many investigations have been done, or how many people have been fined, or
absolutely. And look, they're very experienced in this, so they've got the assessment tools and methodologies. But that's exactly it, and that's the good and bad of it, Jonathan. In that is that the Financial Intelligence Centre is going to have to show everything that's been done. So all the registrations, all the RMCPs, all the feedback. And what's happened over a period of time is that within the banking system for a long time, there weren't a lot of reports going back. There weren't a lot of investigations, and there were very few to pretty much no penalties or sanctions being issued for a long time. Whereas now the Financial Action Task Force is going to have objective measures on what we're going to be doing. And it goes back to what I mentioned on the slide about the requirements for compliance. There's all those different elements that goes into it. But the bottom line is that we've got to do more. We've got to be better at it. We've got to report more. We've got to investigate more. We've got to have more penalties and sanctions that's going to come out of it. And that's an important thing, because you know, you'd like to think that we're going to do a great job and everyone's going to be compliant. But the truth is, not everyone's going to be compliant. And in the assessment, the Financial Action Task Force is going to want to see what's been happening. Because if we go back and say, well, there's been no sanctions, there's been no penalties, they're going to be very skeptical about that. So the Financial Intelligence Centre certainly, I'm not sure to say they're going to be on the warpath, but they're certainly going to be very active in ensuring that there is compliance with this.
Sure.
What I can suggest as well is that if you think that you are an accountable institution, have a look at the Financial Intelligence Centre's website. They've got a lot of directives. They've got the PCCs, that's the Public Compliance Communications. It's very detailed and it's very useful. And as I say, there is the portal, the Go AML portal, that if you fall under the categories, you do need to go on, register and complete the questionnaire. And so at this stage, the Financial Intelligence Centre is going reasonably softly on people that aren't compliant. They do want to see that you are doing something and making headway with it.
Yeah, thanks, Robert. Are there any more questions for Robert? It's been very interesting chat. Very informative. Thanks, Robert.
It was great to
really appreciate your time.
It was great to discuss it. It is important, and I hope there's been some value that that people can get some direction on it.
Yeah, I think it definitely focuses all of our minds. You know, it's yeah, you hear all these terms, and yeah, it was quite an eye opener for me. Accountable entities now, and how broad the net is, and also, you know, 100,000 Rand type transactions. I was thinking of millions rather than 100,000. So yeah, it's kind of touch a lot of organizations.
Absolutely, it is quite a low threshold.
Yeah. But thank you very much, everyone, for joining today. If there are no other questions, we'll let everyone have a really brilliant day. And thank you very much, Robert.
Thank you. Enjoy the rest of the day.
Cheers, everyone.
Thank you. Cheers.
Yes,
Bye-bye. Bye. Bye-bye.
Bye.